everyone, welcome to the Stock Market Morning Prep video for Monday, February 9th. On Friday we had non-farm payrolls numbers that came out, and the street obviously liked it early on in the morning. Markets actually rallied into the afternoon session and then slowly started to selling off, closing in the red. So that's not a good sign that we had some sort of an intraday reversal. But again, still above its respected areas, and I'm going to show that to you on a daily chart. I'm also going to show you a couple of indicators as well, just to see where we are and really kind of get a good handle on this week's trading. Now, we had a couple of things that's interesting to me. IWM, which is the Russell 2000 ETF, you said we're looking at 1180, 1185 to hold in the future. And 119 kind of needed to hold, and it's doing that now, but kind of pulled back. But if you look at the bigger time frames, we're all in an uptrend. The weekly charts are nothing wrong with that; they have not been broken. Daily charts are really in a big chop fest for the last couple of months. Actually, starting from November, it's been really difficult trying to hold any positions if you're doing so. But we want to kind of get a good handle on this now. We're coming into some seasonal weakness in bonds that ends at the end of April. Now, that could put a bid in U.S. equities, right? Money rotates out of bonds. We're at a really longer-term uptrend channel. I'm going to show that chart to you as well. We also have the DAX, the German DAX in Europe. Big index, and that has broken out, making new highs because of the ECB. Now, what... that's a good positive, okay? However, when the markets continue to stay up here at these elevated levels, you have to realize that at one point, if it cannot break out, it's just going to fail. Now, this is basically a third time trying to break out here, and it's going to need to do so pretty quickly. I would say at least by this week. If not, then I think we're going to succumb to some selling pressure. So, believe it or not, guys, well, it looks good that the markets may rally here and start taking out the highs, and if it does, we're going to follow that price action buying pullbacks. If we indeed fail, then I think the markets could fail miserably and look for that short-term correction that everybody's been looking for the last 3 years. And I'm not talking about a 5% correction, but I'm talking about anywhere near 10 to even 20% correction, where we are so overdue. And that would be healthy for the markets, okay? But for now, we have to look at our charts, and the charts are giving us, we're range bound. Some of them we have horizontal channels. Some of them we have descending triangles and symmetrical triangles, but if you will, we're still within a channel. And I want to show that to you now. Let's get right into it. You can see here the bullish percent SPX has gone back into a buy signal, which is actually very good. But look at here in the line chart. This is just ugly. I mean, up, down, up, down. So believe it or not, since the beginning of December, we have gone nowhere. I mean, we just tested lows, we tested highs, we've gone nowhere. So really, terrible price action. Here's the NYUD, advanced decline with volume, and this is a good sign. This is holding above zero. We haven't gone anywhere, but holding above zero while the markets are just kind of gyrating at the upper end of this range here. You can see 1, 2, 3. This is 3 touches trying to break out, and we have failed so far. So usually when they try that third time, they usually succeed, right? It's like you're kicking the door down. You kick it long enough, eventually it'll break down. So, but this is what we have here. So you have this this little area here, and that we've broken. We're trying to break out anyway. Okay. Now here's the USB 30-year Treasury bond weekly candlestick. You could see every time it touches or gets close to it, we fail. Touches, fail, touch, fail, and again, and so on. Well, we're here now, coming into seasonal weakness, along with being really stretched for, I'd say, 8 or 10 weeks coming into this area. It's likely that the markets are looking for some sort of a correction in bonds. Okay, now, remember, if bond investors are in bonds, they're going to rotate out of bonds and go into what? Equities in other areas. And that's something that we need to watch here, okay? Because this could be a big positive for equities, and this is what the equity markets may need for that additional money coming in. Because remember, we're at all-time highs. We've been up literally for the last 5 years in a row. If we see a monthly chart, it's ridiculous the way the chart looks. However, we're still in an uptrend, and the weekly charts on equities look fantastic. The weekly charts on the USB 30, we look a little bit stretched. So this could be a positive for U.S. equities, okay? Let's take a look at the German DAX. German DAX here, short term, going in from 2014 to now. As you can see, we've been consolidating and gyrating here, and this broke right out, and now we're at these levels. Now, can we pull back a little bit? Sure. But again, a good sign, and that could help the U.S. counterparts as far as stocks are concerned as well. They're a little bit late to the party, but as far as any kind of stimulus, but nonetheless, they did so, and the DAX broke out, and that's actually a very big positive as well for equities. Now, let's go right into the indexes. Here's the transports, right? The transports, to me, have been just doing exactly what it's doing. Really not much of anything, but nothing really wrong, bearish, or bullish. We're just, again, in this triangle. We are making lower lows and lower highs, a bit concerning, but we have maintained this position here, this support area. So this to me still looks good. We're back, starting to curl back up above zero on the MACD. RSI here breaking above 50 percentile and starting to move up. So this to me looks pretty good. Let's see what happens this week, because if we get some movement in the transports, and the transports, our leader here, can start to break back out and at least challenge these highs, we should get a nice big pop in equities. Okay. Qs, take a look at the Qs. Now remember, Qs, we need two big factors for a real good market rally. You need technology and banks and financials. If you don't get the two, you're going to have a minimal bounce, and then that's going to probably get sold into. Like Friday, just to be example. Just have to give you an example here. Okay, lower lows, lower highs, continuing. That's true. However, we did close at the lows from Thursday. We didn't take out the lows, so it wasn't necessarily reversal day. But look at this MACD RSI again, holding true to this move that we've had for the last 4 days. But again, we're still in this channel. We need to break out of these channels. You might want to write down these areas here, guys, and put alerts on them, because that's going to be important. Okay, big one. This is the IWM. This is our secondary leader. Russell 2000 is 25% financials. Very important. Okay, if the Russell can break out with the help of the financials, then I think you're going to have a big move. And the Russell 2000 can take every other index with it. And what I mean is the transports and the other indices I just showed you. Very important. But you can see what a mess this index is. Since November, this has gone absolutely nowhere. We did break back above this key area of 119. This needs to hold now. If we start to break back down again, we might at least challenge that 200-day moving average, which will affect U.S. equities being kind of soft. And then we might succumb to some selling pressure. And then, as you know what happens, a pullback could turn into a full-blown correction. So just keep that in mind, guys, okay? So this is important. But again, looks good here. RSI moving higher, MACD starting to cross back above zero, and we're really cleared at 1180, 1185 in the Russell future, and then 119 here. We're holding true here, but we do have a doji and a decision candle, so we're going to need to see what happens on Monday. Let's take a look at two more actually. Here's the XLF, and I like gauging that XLF to see how things are going in the banks and financials. That'll help out the Russell as well. But you can see here, we're weak. I mean, this is not a great looking chart here. We are very weak here in these banks and financials. I mean, this is something that I would like to see start to maybe come in a little bit, test that 50-day moving average, and then really start to break out higher. I mean, if that happens, then you'll definitely get the Russell 2000 moving higher. Okay, here's the last chart, is the Dow Jones. You can see pretty much repetitive patterns here on all of the 5 indices. We're either in a sideways consolidation, or we have some symmetrical triangles and descending triangles. But all in all, it's still within in a defined range. So we're going to need to really break out of these areas. So it's all about wait and see, guys. Can't call the market bullish. Longer term, you can. Daily charts, really a mess. You can't really say short them here until we get some price moving telling us what to do. Now, we had good numbers on Friday. Markets rally, and then they clearly reverse closing in the red. Today's going to be an important day. Monday's going to be an important day to see where this market is headed. Let's take the cue from the markets, and then we start going and adjusting trades and putting some money to work. Have a great day, everybody. We'll speak to you later. Take care.